Thank you. Welcome to Century Ply 4Q FY20 earnings call. We have with us the management of Century Ply today for their comments. Over to you, sir, for your opening comments. Thanks.
Yeah. Good afternoon, friends. I am Sanjay Agarwal, MD and CEO of the company. Keshav Bhajanka, Executive Director. Nikita Bansal, Executive Director. Mr. Arun Julasaria, CFO of the company, have joined me in welcoming you to the fourth quarter and annual results call for Century Ply. The year, as we all know, has ended with a turmoil, and since entire world has got affected by pandemic, I'm sure you all have got bored hearing all this, but yes, that's a fact. Although we have done satisfactory well in tough times, but still considerable amount of loss in sales.
The conference is now being recorded.
We expect current situation to get better after Q2. Frankly, we expect that Q3 we should be returning to quite near to the normal. Although we have resumed our operations and sales have started picking up, but getting back to normal level seems really challenging, because we can see that situations are changing. Guwahati is closed, Chennai is now closed, Bombay is still opening, closing. Overall, the year was satisfactory. Last year was satisfactory in terms of financial performance. The sales, of course, did not grow much, and then we were affected by the last 15 days, which are the most important time for sales annually. But there is a silver lining. EBITDA, barring impairment loss, showed tremendous improvement. Net profit remains flat. Our debts reduced considerably, and we could have been debt-free by first half of current fiscal. But due to current situation, it seems that it will take some more time. Financial ratios were favorable, and working capital cycle showed very good improvement as debtors days improved and inventory level were considerably reduced in our plants. In plywood, we achieved highest monthly sales in immediate preceding quarter and expected slight growth in Q4. But of course, right now we have a very easy way out because of the COVID. We took a beating. Laminates did well in the year gone, and very good improvement in margins have happened as promised by Keshav in last year, vis-a-vis the year last. MDF segment also performed significantly well with 19% jump in revenue from preceding year and EBITDA at almost 25%. Particle board has reached optimum capacity utilization and revenue improved marginally. As informed earlier, also we are at optimum capacity utilization and need new capacity enhancement for both MDF and particle board. Most of the homework is done, but in the present situation, it is impossible to take a final decision. Our CFS division is under pressure due to competition, and as well as because of COVID, the import and export have been very, very adversely affected, and thus it affects the CFS division most. Now I will hand over to CFO Mr. Arun Julasaria to take you with key financial data for current quarter, post which we are open for question and answers session. Thank you.
Hello. Good afternoon, friends. I am Arun Julasaria, CFO of the company. First of all, I will like to speak the customary disclaimer that this call is just to discuss company historical numbers and forward-looking ideas. In no way it should be construed as an invitation to invest in the company. We have already mailed you a detailed presentation showing analysis of segment-wise numbers. I hope you all have received the same. So I will not discuss numbers in too much detail, and I will take you through only key figures. As you are aware that our Laos subsidiaries, business of Laos subsidiaries was closed down for the whole year. So we have taken impairment there. So our share of impairment was 45.63 crore, which we have recognized as business loss in standalone accounts, and that has been taken in plywood segment. So the EBITDA margins of plywood segments are considerably low because of this impairment loss. Bearing this impairment loss, overall financial results for the whole year are satisfactory. Revenue stood at 2,282 crore against 2,263 crore last year, almost flattish with slight improvement. As you are aware that country was locked down due to COVID-19 in later part of the March month, and these 2 weeks were quite crucial for us because the dealers tend to buy maximum in these 2 weeks for availing maximum trade discounts. Our sales team also tried to push maximum to earn maximum incentive, which is based on their sales performance. So these 2 weeks were quite crucial, and we estimate that we lost around 90 crore revenue because of this lockdown. And accordingly also lost our bottom line to that extent. EBITDA margins considerably improved from 13.5% to 15.6% without considering this impairment loss. Profit after tax was almost flattish. On foreign exchange front, we did not have significant loss. As on 31st March 2020, $10 million were hedged at 75.68, but as on date, all our exposure is open. Regarding tax credit, we are still following old system because we have got MAT credit. So till that MAT credit is fully utilized, we shall like to remain in old system, although we will keep on reviewing as and when we think fit. On balance sheet front, company net worth have first time crossed to 1,000 crore. Debts have substantially come down from 468 crore to 188 crore. Despite liquidity crunch, working capital cycle reduced from 86 days to 67 days. The term loan taken for our Punjab unit, MDF unit, was fully prepaid. Plywood as such have done well, but EBITDA margins for plywood are a bit lower compared to last year. Laminate have done exceedingly well, and EBITDA margins have improved from 8.8% to 13.5%. In case of MDF, we have now reached optimum capacity. EBITDA margins have also reached to 24.7%. While planning the project, we thought of 25% EBITDA margins, so we have achieved those 25% EBITDA margins. And now for further growth in MDF and particle board, we need new capacities. We had a plan to set up plant in UP, but for the timing that project is kept in abeyance. As we informed you in last call that our license for MDF and particle board unit in UP was challenged in Green Bench. So Green Bench have for the time being quashed all the licenses issued by UP government. So as on date, practically we do not have license, but as per Supreme Court directions in earlier decisions, if any industry is based on agroforestry timber, it doesn't require licensing. So UP government will have to notify alternate system, and they can bypass this licensing requirement. And we expect positive developments, and we shall have the necessary permission without license to set up that plant in UP. But considering the COVID situation, we have kept project in abeyance for the time being. We shall take call at right time. Like MDF in particle board also, we have reached at optimum capacity and optimum EBITDA margins of 24.3%. Here again, we need capacity, which I discussed for UP plant. In case of logistic business, although there was a bit degrowth due to competition, but we could maintain our EBITDA margins. With this, I'll conclude my discussion on the numbers. For any number-related query, you can call us separately, or you can ask question here also. But I'll request, if the promoters are on this call, you confine your questions to qualitative aspects only, and number-related queries can be separately referred to us. With this, I invite questions from you all, please.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Any participant who wishes to ask a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Subrato Sarkar from Mount Intra Finance. Please go ahead.
Hello. Hello.
Hello. Hi.
Hi. Sir, just one simple question. Like, sir, recently has India imposed this like there is like there is additional import duty on MDF, and if it's so, how will it impact us?
I don't think till now there has been any duty, additional duty has been discussed.
On MDF, there was country-specific anti-dumping duty. It was even before this COVID situation arose, and that's continuing. That's continuing. That is country-specific and thickness-specific.
Yes, sir. So, is there no extension on that, sir?
No, that's continuing. That
is still valid.
There is no new development. That's continuing.
Okay. It is valid for till what period, sir?
Till it's withdrawn.
Okay. There is no specific time. Okay. Okay. Thank you, sir.
Thank you.
Thank you. Our next question is from the line of Madhav Marda from Fidelity Investments. Please go ahead.
Hi, sir. Good afternoon. I
Hi.
just wanted to get a picture from you on the MDF industry in India. If you could just help us with the industry level capacity utilization in the domestic market, and also with the INR depreciating, I would assume that makes us stronger versus imports. And of course, margins have recovered very well in the industry in the last 1 year compared to FY19. So do you think that 24-25% margins are here to stay, like for the next 2 to 3 years?
See, I will first speak about the future a little bit, because the present drive in the present situation you have seen, government has identified furniture as a very thrust segment for Indian exports, becoming reliant on furniture and becoming a force in the export market. Furniture is one of them. So if that happens, or if that materializes in next say 1.5 year or 2 years also, so the market for particle board and MDF is going to really grow a lot. Even if it doesn't fructify too much, but still it will give a lot of support to MDF and particle board industry, because all the ready-made furniture is made of only particle board and MDF. The capacity today is approximately 18 lakhs cubic meter. So, we have 5,000, around 4,500, 5,000 CBM per day.
Okay.
And you see, the capacity is still, our capacity is fully utilized. Practically, we are there at 90%. But because Green had come up with one plant in South, but I believe that because of their exports now, they are doing quite well as far as they have improved their situation. But exactly, I don't have the numbers at the moment. And Exxon also has put up a plant, so even I think they are also having some spare capacity. But in times to come, it is very, very clear that because of the government's trust, and now people putting in, the government putting in some more duty, import duty, some kind of a protection on all the thicknesses. Because right now it's not there in all the thicknesses. So the import will go down further, and local players will have much more flexibility to play within India. So the coming times are good.
And against the 18 lakh CBM capacity, how much is the demand right now in India for MDF?
I think we Okay, so actually I don't have the data right now in my hand. There is no point in giving you, Ghoda Ginti wala data. There is no point in giving you that.
No, sure.
Of course,
So,
I can calculate and give it to you.
I can just take it from you offline later. But I think my question then would be that the margin for MDF has come back in FY20. Like, what has driven the improvement in margins, and do you think like this is sustainable for the next 2 to 3 years?
You see, as a manufacturer, I always believe that it is sustainable. I don't see that in present situation the prices of raw material will go up. I don't see financing costs going up. I only see that imports can go down. I only see that the industry will have to go and do better because of the focus on furniture. So there are all the positive signs that yes, we will be able to maintain somewhere near this, or maybe improve a little bit. Okay. But nobody knew COVID will happen.
Yeah. No, of course. No, my question was just a little bit more longer term, because it was a good improvement.
Yeah. So we are quite hopeful, rather very, very hopeful, and that's why we are talking that we are looking at putting up one more plant actually.
Good. So just last question on MDF. Our biggest customers for MDF would be like, who would be our biggest customers? And it's obviously more of a B2B business, right, versus B2C?
It is all B2B business, most of it. But yes, MDF has started getting into B2C also. Okay. Particle board is still mostly B2B. We have all India, throughout India, we are in touch. We call them OEM, original equipment manufacturers. So all the converters who convert from these panels to finished ready-made furniture. So we are in touch with all of them. Even Godrej, you all know that is a big manufacturer, or there is a Space Wood. You all must have heard these names. So all of them are doing quite well. So because we are in touch with them, so they are our customers. We usually sell directly to few of them. Most of them, they go through some kind of a distributor locally.
Okay. Right, Vivek. Thank you so much.
Thank you. We'll take our next question from the line of Ashish Poddar from Anand Rathi. Please go ahead.
Yeah, thank you, sir, for taking my question.
Hi, Ashish.
So, hi, sir.
All good?
Yeah, all good, sir, all good. So just want to understand your sense on what the kind of recovery we have seen after easing of lockdown. So it is almost 2 months now when we have seen this. So what is your sense about the demand pattern in the last 2 months? And is there a case that whatever demand we are seeing currently is coming from the existing projects, and in absence of new project announcement, perhaps in the coming quarters you will face more distress than whatever numbers we are talking about currently?
Very good question. Very good question. So you see, April was actually a washout, I think, for everybody. There cannot be any discussion. May, we have done about 30%, and that is what I had expected, a little lesser than what we did actually, but then we achieved 30%.
Right.
This month we are looking at a 50%. So I think we will be able to cross 50%. Now, for some industries, we read in newspaper that some industries are reaching at 70%, 75% for paints and all that we have heard. But the situation of the market, I don't think is ready for reaching 70 or 80%. Yes, we can produce, but selling it in the market may be a little more. Logistical issues are there. People are unable to go in the market. Bombay, Chennai. We all know about Delhi. We all know about situations everywhere. So you cannot really force people to go and work. So that is the first part of it. The second part of view that there can be a demand reduction because of no new projects are being awarded. Yes, that is our apprehension too. Very frankly, we believe that till June, even in July, the old projects will be supporting us. Some part of August maybe, but sometime in August maybe we may face. But you must be hearing in newspapers also, you must have read that some of the workers are now returning back. We expected that the workers or the contractors will not return back. But then we already see that, yes, they have already started coming back. If you live in a city and we go out today in Bombay or Calcutta, if you see the traveling time has come back to the normal original half an hour, 1 hour, 1.5 hour time. So everybody is already on the road. So we are actually dying to go back. We are even now, the threat also, the fear also in the mind is not that much now. It has reduced to a great extent actually. Even I am ready today, rather I believe that I might have passed through COVID and I have already developed immunity. That is my conviction in my mind. But actually that is what has to happen. If I am not affected, I know I will be affected. Nothing can stop it. And we will have to just cross it. So वो बोलते हैं ना कि आदत पड़ जाएगी. तो इसकी भी आदत पड़ जाएगी and we will learn to live with it.
बिल्कुल सर.
So yes, what you said is really right. Yes, there is a possibility. We cannot deny it.
Okay, sir. Thank you so much and good luck.
Thank you, Ashish.
Thank you. We'll take a next question from the line of Jignesh Kamani from GMO. Please go ahead.
Hi, sir. Just want to make about three division, particle board, plywood, and MDF. As per your estimate, which will revive first and which will revive last? And second thing, if you take about the end use wise, breakup between the residential and commercial use, how is the breakup between for plywood and MDF?
Very good. See, I think, or rather what we see in the markets also, I think the MDF and particle board will revive faster. Because the involvement of the contractor is a little lesser there. So it is possible to still run the OEMs, the small factories, and actually produce the finished goods and sell them, and the customer can just buy and use it, you see. Mm-hmm. So we believe there are no, if you ask me the second question, I have no reply. Whether there is a data or there is a study, no, there is nothing. And the second question is?
If you take about end use wise, like plywood and MDF, how much percentage go to residential usage and how much go to commercial usage?
Mm-hmm. So we believe that most of these, plywood is going into residential only. Sure. Yes, a plywood, there is a plywood which we call it a commercial plywood. That plywood is used in office commercial things, because commercial furnishing requires change very fast. maybe in 10 years time or 8 years time you want to change the furniture, and that's why actually people can go for a commercial grade plywood, and that is much cheaper, and it can be still compared in some way with MDF. Otherwise MDF is cheaper, so MDF is used mostly in commercial. But yes, nowadays because of the ready-made furnitures use only MDF and particle board.
But I believe commercial is mostly using particle board, right?
MDF is using particle board and MDF also, yes. Okay.
So from the particle board, MDF consumption, say 50 to 60% going to commercial and only 30 to 40% going to residential use?
Yes. Actually, क्या होता है residential में, you see, you have to still do some cleaning, you have to use a wet cloth. Then people's mind also there is an issue that it may open up, it may delaminate. So particle board is a very very light product. So that is the reason that particle board is used lesser in residential. But all the ready-made furniture is made of particle board and MDF only. So if you want a cheaper ready-made product, then that will be made of particle board. If you can afford a little higher, you can go for an MDF product.
Sure. And my last question, have you seen that people are downtrading now because of the income level has gone down and replacing plywood with MDF?
This is a question in many people's mind, but then in Indian conditions, see, as far as century plywood, the user of century plywood is the top strata of people, obviously. So for them, actually, it is making no difference, neither it was today nor it will be tomorrow.
But from Ecotech to or Sainik to MDF.
Sainik to MDF and all that. So that is okay, that we are also ready, and there are many people who are now coming up who were not using the furniture yesterday. Now people have started using the furniture. Yesterday he was just buying some cart and putting some civil construction to make even sales and all that. But now he's going for the furniture. He has earned some money and he wants to progress in the social ladder. So there are many new people coming into plywood also. So this is okay. In other countries, actually, you see the transformation from plywood to MDF was so quick. Yes. In India, neither it will be quick nor it will be anywhere near the percentage which it has happened in other countries. It cannot happen.
Understood. Thanks a lot.
Thank you.
Thank you. Our next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Hi, sir. Just one question from my side. That sir, over the last 2 or 3 months, have we seen the trend of consolidation playing out? Considering plywood industry has a lot of unorganized players, so due to cash flow issues, have some of them gone out?
You see, because of the GST, earlier people used to create too many small factories. The smaller guys, they used to create too many factories to save more of excise duty. After GST, this one change has happened that they have consolidated among themselves. They are not dividing one factory's production into 2 or 3 small names and these things. Otherwise, there is nothing much worth in our industry to consolidate. What do we consolidate? Tell me. Is there anything I can buy? Those small factories are just too small. You cannot really buy them. To put up that extra capacity in my existing factories will be much cheaper, much faster, much more quality oriented. What we can do is we have developed this Sainik plywood or all these small brand, 1 or 2. They can be outsourced with quality control and branded separately and sold. So that is happening. That is taking its own sweet time to grow. But I think that's it. There cannot be much of a consolidation in our industry.
Okay, sir. Thanks.
Thank you. Our next question is from the line of Nehal Shah from ICICI Securities. Please go ahead.
Congratulations, sir. Hi, sir.
How are you?
Very good, sir. How are you?
I'm all good. All good. Tell me.
Sir, congratulations for indeed very good cash flow management. That I think is a very good silver lining what we've seen in the numbers. Sir, my question would not be rather on volumes, on sales volume, because that's beyond our control and we don't know as to how the situation would pan out. But my question would more be on the cost side, which is actually under our control, right? More under our control. So what are we actually doing or proposing to do as far as cost saving initiatives are concerned, and which are the areas of operations are we looking to control costs?
I think let Keshav take this.
Sure.
Hi, Neil. I think we have been able to make substantial savings in our cost overall. I think over the course of 2 months, we have saved over 10 crores a month with regards to our total cost. And I think that for the immediate future, we should see a saving. What we have done is we have reduced salaries, but at the same time, we have committed that we will be paying back a certain percentage of the deduction in case the company comes back into profit, which I'm sure it will. So as such, I think that there is going to be a reduction in the cost for now, but once we come back into profit, it is actually a deferment more than a out-and-out cost reduction. There are certain areas where we are working very hard to reduce costs further. One of those areas is directors' remuneration has been made zero, employee costs have been reduced to a certain extent, and other costs also rent, etc. will be renegotiated. So I think we are a more cost-light company at the moment.
And what about E&P spends?
I think that we will take a call on as and when time progresses. As and when the market develops, we'll be taking a call on that. As of now, in the first quarter, the cost is reduced substantially. But going forward, we'll be taking a call month by month.
So basically, it will depend on how the volumes are resurfacing post the first quarter.
It will depend on a couple of things. It will depend on the visibility that we have for the market. It will also depend on the sort of brand proposition that we will be forwarding. So I think as time progresses, we'll be able to give you a clearer picture.
Sure. Thanks a lot.
Thank you. Our next question is from the line of Sushmit Patodia from Motilal Oswal Asset Management. Please go ahead.
Hi, good evening, sir. Good evening to the team. Hope everyone is fine, safe. So, sir, my first question is, if you could tell us a little bit more detail about this impact of China, assuming, as you know, right now, most of the goods are not allowed to enter China or being evacuated from the port. So how does this impact both our plywood? We understand the furniture part, but does it have any impact on the plywood business?
You see, in terms of plywood, there's never a substantial import into India from China. So I don't think there's going to be a big impact. Yes, in the case of MDF and particle board, more than the anti-China sentiment or something of that sort, I think the issue is that rupee has depreciated to 75, and I think that has increased the cost of imports substantially. So I think that plays into our hand.
Got it. So it's an indirect benefit that would then lead to the higher consumption of MDF.
Definitely, because imports, because the cost goes up by close to 10%. So,
yeah. And just wanted to know, if let's say for some reason we don't get the go ahead in UP, how much would there be a hit for any investment that you would have done there?
There is zero hit as of now. So thankfully, our investment has nothing. We have one person, a senior person who's employed, but that again is a minuscule expense.
So no ordering of plant and machinery, nothing has been done.
No, since the license was put on hold, since it was challenged in the NGT, we took a conscious decision to defer the placement of the order of plant and machinery and the purchase of land. Everything is identified, but as of now, no order has been placed.
Got it. And last question, Keshav, for you was if you could give us a little more detail about the sales transformation program that you were doing. Where are we in that journey now? And,
could you just repeat that? Sorry, your voice broke about that.
So, Keshav, the sales transformation journey that you were spearheading, just wanted to know where are we in the journey and how much is left to cover the entire country.
So, it's very, very funny to say this, but I think COVID was a blessing because we have been trying to roll out an SFA in India, a sales force automation app, over the course of the past 2 years. And during the 2 months of lockdown, since there wasn't too much physical work that we could do, we got behind it and we were able to roll out the entire SFA app pan India. So initially there are a lot of teething issues, but I think that this is one of the most significant changes that we have brought about with regards to how the sales team operates in the market. And the benefits of this, I think there'll be very clear and immediate benefits. Maybe we won't be able to see it in terms of volumes because of the current scenario, but it is, I would say it was a big change in the way we have been operating, and it's going to help us long term in a very, very considerable way.
So SFA V2 is now fully implemented across the country?
SFA for us is implemented pan-India, with the exception of maybe 1 or 2 locations where, there is no work that is happening right now. So in certain geographies, smaller geographies, maybe there is an issue, but otherwise it is rolled out pan-India.
Okay, congratulations on that. Thank you.
Thank you so much.
Thank you. Our next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity. First, I wanted to check if the new capacity in UP does not go ahead, do we have any alternate site in mind? So why I'm asking is because if we have already reached the optimum utilization, then and given the timelines for greenfield expansion, wouldn't it be wise to also look at alternate sites, and if we have planned anything on that?
So, that's a very interesting question because there are 2 parts to it. As you know, we have been able to set up our capacity faster than anybody else in the industry. We started Hoshiarpur in 16 months from the day that we broke ground. Our new capacity, we are planning to set up even quicker than what we set up Hoshiarpur in, because now we are more knowledgeable, and now we are in a better position to execute an MDF project, that being our first and this being our second. Having said that, the Supreme Court of India, which is the foremost authority, has already given an order, a comprehensive order that states that MDF does not require license. Right now, it is caught up in the bureaucracy. We are working very hard to get the registration process done, but technically, I do not need a license to set up an MDF unit. We have a plan B, of course. In Hoshiarpur, we have created the space for an additional line. We did this when we established the first line, thinking that we'll double our capacity. But considering the raw material cost benefit that Uttar Pradesh is likely to provide, our preference is still UP. Of course, we do have the backup. As of now, we are not even thinking about the backup because the cost advantage is very significant in Uttar Pradesh. And I am sure that within the next 3 months, we'll be able to give you positive news on this front.
Got it. Second, when you kind of elaborated on the cost reduction, I couldn't hear it clearly. You said you could save 10 crores for 2 months. Is that I heard right?
10 crores per month.
10 crores per month. And
over the course of 2 months. So 20 crores over the course of 2 months.
Okay.
Sorry.
And that includes the salaries part of it, right?
Yes. A substantial part of that is from salaries.
Oh,
there have been other cost reductions also. Our interest cost has reduced considerably compared to last year, and so on and so forth. But a substantial part of the saving has come from salaries.
Understood. Would it be possible to give us what is the monthly fixed cost, salary, and the other office overheads, factory overheads, etc.?
I think our CFO would be better placed to give you this information. Arunji, if you could just pass on this information.
Yes. Can you please repeat your question?
Just trying to understand the cost, fixed versus variable. So what would be our fixed cost run rate on a monthly basis, broadly? Would that be like 30-40 crores a month?
Our fixed cost is around 30 crore a month. Without reduction, it is around 30 crore a month.
And post reduction is about 20.
I'll just tell you. So with reduction, it is about 22 crore.
Understood. That's very helpful, sir. And just last question, if I may, in terms of the plywood front, you've indicated that the consolidation is not really that material given the small scale in the unorganized fashion. But is it fair to say that some of these unorganized will go out of the business in this FY21 and they may not revive permanently, or you think it could be that they could go out of the market temporarily, but they will again come back?
Once bitten, twice shy. That statement, I think, in this regard holds very true, because a lot of times in the past we have felt that this change was likely to take place. So when demonetization happened, I think all of us, myself and you, thought that this change would take place. When GST was implemented, again, all of us thought this change would take place. So I think we really need to watch and see how things pan out. It's a very difficult it's a very difficult question to answer right now. But yes, there should be some consolidation. We'll wait and we'll comment on this as time progresses.
That's great. Just last question, if I may, with respect to the mix. Could you please help us with the premium volume and value mix for FY20? Premium plywood.
I think Arunji again. Yes, I think Arunji would be better placed.
The value is approximately 71% premium and 20%.
Sorry, are you speaking on the phone? We are not able to hear you, ma'am. Could you please repeat once again?
Yeah, it's 71% in premium and 29% in the Senate category.
This is in terms of value?
Yes.
And volume term?
It would be around 37% more and 8% in category.
And sorry to harp you on that. In terms of this FY19, how different would that be?
FY19 completely, it is approximately 65-35 in the volume and it is 75-25 in the value. So,
got it. That's very helpful. Thank you so much.
Yeah.
Thank you.
Thank you. Our next question is from the line of Neha Talreja from Edelweiss Securities. Please go ahead.
Good evening, sir, and thanks a lot for taking the question. I'm sorry if I am repeating this question if you broadly answered. So just wanted to understand about your laminate segment. Originally, come back to the previous margins that used to be. So is there any one-off impact here? Also, secondly, how much is the export proportion of laminates division right now?
So I couldn't hear your question completely, but if I got it right, you were talking about the margins, and the margins have come back in this quarter and whether that is likely to continue, right? I think that was your question.
Yes, right, somewhere around that.
Long term, we have always said that EBITDA margins for laminate should be in the range of 15 to 16%. Last year was a tough year, but before that we were at 15-16%, and this year in Q4 we would have actually done even better. So I'm sure that in the long term we can look at 15-16% EBITDA margins for laminate, definitely. In terms of exports are about 25% or 20 to 25% of our turnover by value.
Sir, if at all you could mention how much was the laminates export last year, as a percentage of sales? And are we seeing
data on me right now? I'm sure that my team can pass on the data to you.
Sure. In that case, could you just, give some color that are we seeing, exports demand to be much higher, and are we seeing this mix change in the laminates?
Definitely. Currently, our exports are doing well. I think we are at 90% of last year in terms of export volume. So exports are doing better in the domestic market because some of the markets that we are exporting to have fared better as compared to India in terms of the spread of COVID. So some markets are still operational and there the demand is still strong. So for the next few months, I think there will be a higher percentage of export turnover compared to domestic. In percentage terms, there will be a slight increase of export as a percentage of total.
Sure, sir. So that was helpful. So thank you so much. Sir.
Thank you.
Thank you. Before we take the next question, we would like to remind participants to ask a question. You may enter star and 1. Our next question is from the line of Siddharth Rajpurohit from JHP Securities. Please go ahead.
Good evening, sir. Sir, there is a probability that we may have to live longer in this situation. So, do you see more of the furniture industry getting more factory ready and being supplied for installation at the end use? Means, like what is the norm in the developed country where the products
I
get developed?
think, there are a few factors to this. If you look at developed countries, one of the biggest reasons behind the high percentage of ready-made furniture is that in developed countries, the cost of manpower is extremely high. If you compare India's cost of manpower to developed countries, we are actually nowhere. So I don't think that this trend is going to suddenly change just because of the pandemic. Definitely in the interim period when there is a shortage of labor, at that point in time, ready-made furniture would in all likelihood do a little better. But I don't think that there is going to be a grand change in the trend just because of the pandemic. So I do not think that is going to happen.
Okay. Thank you, sir. And one question to Mr. Chulasaria, sir. Hello.
Yes.
Sir, in the cash flow, we have sale of property and plant of 98 crores. What does that pertain to? Is this anything with regards to the down payment?
98 crore, it should not be.
Sir, in the current year, if you see sale of property, plant and equipment of 98.39 crores.
Let me see. I'll just answer your question.
No, so one part of this is from the sale of one floor in the current new office building that we have made. So that has generated some cash flow, but I'm sure that the CFO will be able to give you more details going forward.
So that is the only question sir can give me during the call. You can take another question.
Definitely.
Yes. Thank you, sir. All the best.
Thank you. We'll take a next question from the line of Arun Baid from BOB Capital. Please go ahead.
Hi, sir. Sir, of our total plywood sales, what proportion would be coming from the top 10 cities of the country, sir?
We don't actually have a figure per se, but what I can tell you is that, even when it comes to cities, you need to define the area. Because suppose we look at Calcutta, when we talk about Calcutta branch, we speak of it as one branch, but there's a lot of up-country sale that takes place. So I can do the working and my team can get back to you with the figure for the towns, but it becomes a little difficult because cities and the up-country are a little, when we speak about the city, it is the metropolitan area, right? But a lot of sale takes place in the adjoining suburbs and in areas that are not part of the metropolitan, the geographical metropolitan. So we'll get back to data exactly on the 10 cities, but at the moment I don't have it on me.
Okay. Thank you. Thank you very much.
Thank you.
Thank you. Our next question is from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just wanted to understand one thing. If you look at your revenue mix, they're tilted to almost about 55% coming from plywood, where the growth also has been a little muted in terms of if you look at last 4-5 years. And if you look at your laminates and MDF and particle board, the growth has been much better when with margins being much healthier. So if you were to chart out a more like a 3 or 4 year strategy for you, where do you see this proportion settling down for the individual product? Because the incremental capacity addition will also happen more towards the MDF and PB. So how should one look at it from more like a 2 to 3 year perspective? If you can just help us with that. Thanks.
Can I take this in a slightly different way? You see, today, even in the case of plywood, we are barely 4% of the total market. So I am 100% confident that the market will grow, maybe slowly, but we will be growing faster than the market. So plywood turnover will go up. Having said that, you have seen that in MDF and particle board, we have ramped up our capacity to 100% within the first 2 to 3 years. So it is definitely a growth area for us. Sitapur will effectively double the turnover of the MDF and particle board division once it comes on board. So within the first 12 months of Sitapur being operational, we should see our MDF and particle board turnover double of what that is today. Assuming that happens in the next 2 years, definitely there will be a switch towards MDF and particle board. The percentage of overall turnover will increase. With laminates, I believe that yes, we can look at a 15% growth going forward. But plywood as well, I would not say that this low growth is likely to continue. I think we are well positioned for 10% growth. Actually, we were well positioned for 10% growth prior to the pandemic. We saw it in the last quarter also. But yes, in relative terms, MDF and particle board will be growing faster.
Okay, so to that extent, your margin profile is also inherently improved because of the better revenue mix itself. Is that the right statement?
Yes. The EBITDA margin, blended EBITDA margin will increase.
Oh, fair enough. And so just one thing to Arunji, while we have seen a very sharp decline in the overall debt position, but that's not completely reflected in the interest cost element that we see. So I'm saying going forward I'm saying will that the benefit will be more back-ended and will be the impact in FY21 or will look at it?
The debt reduction has not, you are seeing the debt reduction figure at the year end. So debt have come down gradually over 12 months time.
Okay. I'm even looking at the quarterly interest cost, still at about 8.5 crores. So that even if you were to analyze that number, you still arrive at a 35 crores kind of a number, corresponding debt being far lower. So I was just trying to understand that.
In fact, what happened, in between we had the surplus amount also. We have borrowed, say, by way of WCDL, now we have to borrow 60% of our cash credit we have to borrow in the form of WCDL. But in between we have cash surplus. So we park that into liquid funds. So that is reflected in other income as interest income.
Okay. So I should look at net interest number rather than looking at
Yes.
Okay. And sir, does this 188 crores include all the kind of interest-bearing instruments, or are there any kind of exceptions?
Yes, all except current maturity.
Except current maturity?
Yes.
So what would be that amount?
That is classified as current liability, so that's not included.
Okay. Thank you so much. Now the day. Thank you.
Thank you. Anyone who has a question may enter star and 1 on their touchtone telephone. Our next question is from the line of Karan Bhatia from Asian Market Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So I just wanted to understand the impact of cyclone, on our financials.
So this is one area where we are extremely proud. The day after Amphan, the very same day after Amphan, our laminate unit started production again in Calcutta. We were able to get the plywood unit up and running within 20 days. And I was in the factory the day after Amphan. And if you saw the level of damage, you would have said this is 3 months out. So we have been able to ramp up and gear up substantially, very, very well. And we are back to production, like I told you. With regards to financial impact, it was all under insurance. So I don't think there'll be any substantial financial impact. Yes, the 15-20 days where plywood wasn't functioning, the overhead cost for that can be considered as the financial impact. That's it.
Okay. And sir, can you split our sales into retail and institutional, and how are things shaping up there?
Extremely difficult to do that. Sorry. It is extremely difficult to do that because even if you look at a large project, a lot of the time projects are supplied through dealers. As a percentage of our overall sale, our direct sale is not even 5%. So for me to give you a figure of institutional versus retail becomes very difficult because if I look at it from direct billing point of view, 95% of my sale is retail.
Okay, because we envisage better recovery in the retail replacement, compared to the institutional project, and this is where my question was coming from.
Again, the entire modus operandi for us is even institutional orders are being routed through retail. So because of that, it's very difficult for me to give you any sense of it right now.
Correct. Okay. Yeah, thank you. That's it from my end.
Thank you.
Thank you. Our next question is from the line of Prashant Kothari from Pictet. Please go ahead.
Yeah, hi. I just wanted to understand how are you managing the working capital so well. I mean, there are other businesses who are probably being a bit more relaxed with their dealers, saying it's okay if you pay a bit late. But here it seems that our receivables have gone down substantially. So what exactly have you done there to bring down the receivables so much down?
So our debtor policy is very, very clear. Our outstanding days are very well defined, and we do not take exception to this for the sake of short-term gain in sales. I think that is one area where we have really been able to ensure correct management practice. Other than that, one more thing that we have done is we have reduced inventory. So as you know, we have hired a consultant called Vector, and they have helped us with a replenishment system that enables us to work with lower inventory compared to what we were doing earlier. So I think both these put together have helped in a much healthier working capital cycle for us.
And is the working capital cycle very different in MDF versus ply segment?
Definitely. MDF, the debtor days are far lower than plywood.
Okay, so as your sales mix changes in future, as you're saying, MDF and particle board will kind of grow faster than ply, then it would mean that the working capital would also improve like structurally.
Yes. If you look at the different divisions, I think the CFO can give you a breakup, but you should see a further reduction in the working capital cycle as a higher percentage of our sale comes from once the new plant comes, then there should be a further squeeze in the working capital cycle.
Okay. And
there was one more reason. Sorry. There was one more reason for this reduction of working capital cycle. Our chairman actually, in the beginning of this year, he took it very decisively that we must reduce our stocks across country. So, the special analysis was done and real efforts were made towards it, and, the basics of stocks were also changed for all the items. That yes, this item was being stored for 20 days, now it should be stored for 15 days, 16 days. So all those have really made a lot of difference to our working capital cycle actually. Everything makes a difference, every small thing. And he decided in the very beginning of the year that this has to be done. So it happened.
Okay. And this new plant that you'll be putting up for MDF, would it come under the 15% tax regime?
It should, why not?
We have incorporated a separate company for this purpose. So we will be getting a 15% tax rate for the new plant.
Okay, thank you.
Thank you.
Thank you. We'll take a next question from the line of Siddharth Rajpurohit from JHP Securities. Please go ahead.
Ji, just wanted the answer on that cash flow question of 98 crores in consolidated and 38 crores in standalone.
I'll come back. In fact, I don't have the detail at the moment, so I'll come back to you. Okay. Please call me personally.
Sure, sir. And can you give the current maturities also, sir, which possible in the debt?
Yes, just 1 minute.
That figure I need to give you within 5 minutes, okay?
So I will email you for both the things, sir.
Okay.
Okay. Thank you. Okay.
Thank you. Our next question is from the line of Sushmit Patoria from Motilal Oswal Asset Management. Please go ahead.
Hi, sorry to come back. I wanted to know, for whatever reason, if the UP permission doesn't come through timely, is there a backup plan? Because this is such a high margin and low working capital segment for the company.
So like I already mentioned, when we came up with the plant in Hoshiarpur, we actually have created the entire infrastructure. I don't even need to put in another shed. In my existing shed, I have left space for another line. But you see, this is not a plant that we are setting up for 1 year or 2 years.
Correct.
There is a long-term cost advantage that we are getting out of Uttar Pradesh. That is the reason we are putting so much trust in it. Otherwise, setting up the unit in Hoshiarpur is a very easy exercise for us. To be honest, it requires maybe a 8 to 9 month time frame to establish a 67% increase in capacity there. So that is an easier exercise for us, but Sitapur will be more beneficial long term.
Okay. Okay. So, I mean, let's say worst case scenario, if whatever happens, you can still go ahead and take a decision on Hoshiarpur as well.
100%.
Okay. Okay. And is there a timeline that you set for yourself that you could share with us? Saying, okay, by this point, if we don't get through in UP, we'll
We
go
are
ahead.
very hopeful that within the next 3 months, we should be able to give you positive news about UP.
Okay. Because, you have removed it from your capex plan for this year. So that's why it's a little more intriguing.
Since it cannot be frozen at this point in time, we did not want to leave it there. Our board also told us that it is better that you take it out, and once you come back on it, because we already got permission from them, we can put it back. Our board has already approved the investment.
Oh, okay. Best of luck for that. And
thank you.
Thank you. As there are no further questions from the participants, I now hand the floor back to the management for closing comments. We hand the floor back to the management for Century Plyboards India Limited for closing comments.
Oh, wow. So, thank you, friends. Thanks a lot for taking out your time and joining us in these difficult times. As a management, I can assure you that our company will stay at the highest and the best possible corporate governance, and our efforts are there to get back to our original situation first, our original sales and profits and everything ASAP. And in this, all support of everybody, including the investor community, is very, very important. Hope to see you when we again come back to you for Q4FY20 earnings call. Thanks a lot. Thank you so much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Ambit Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.